What's up, guys, and welcome back to the channel. Today we're going to be talking about the FOMC meeting that is happening this week to decide on what the rate hike will be. We're going to be talking about how that can affect Bitcoin. We're also going to be looking at some of the Bitcoin fundamentals, hash rate, and then we're going to dive into some of the Bitcoin cycle indicators that you can see based off of the halving cycle. So we're going to look at that and see some pretty nice indicators and trends within the cycle that will help you understand where we're at from a macro level. So if that sounds interesting to you, hit that subscribe button, hit the like button, and hit that notification bell to get all the latest updates. Let's dive into it. Okay, guys, so what we're looking at here is the Bitcoin USD chart. This is for the entire life of Bitcoin. Well, almost. TradingView only has data back to 2012, so we're going to start there. But what I've drawn out here is the bull and bear cycles that Bitcoin goes through over time. And you can notice a pretty nice pattern here, and it's really nice for technical people who like to get in here and actually look at the technical data behind Bitcoin. And Bitcoin is nice because you can pull all of this straight from the chain. Everything's recorded, so it's very accurate, and this is why we like it as technical people. So if you look at here, we start at 2012, and then we run up for 2 years into 2014. And you can see that it runs up 61,000%. So this was the beginning of Bitcoin, where look, you can see the price went from about $1 up to $600. So this was Bitcoin's first real run here. And then you can notice here that it had a drawdown for about 13 months. So you can see the next bull run starts here at the end of this drawdown. And this one lasts about 3 years. So it goes from 2015 to 2018, when subsequently the next drawdown occurs for 1 year, same as the previous cycle. Moving into the third run up. The third run up is, again, 3 years, consistent with the previous. Now, and then it leads into the drawdown. And guess what? This was a year. 2022. So now what you can see here, and what I think is going to happen, is we're going to start to see the next impending bull run for the next 3 years, ending at the end of 2025. And this could be our next green box here for the next 3 years. So this is a good time, in my opinion, to get into the space, get some Bitcoin, start watching the price movement. Now, this doesn't mean we're going to go straight up. I think we're actually going to chop for a while right in here, and then we're going to start to move up a little bit in this area, which, you know, brings us to that top right in the 2025 range. So it's going to be a slow move, but the good news is it's going to go up. Obviously, it'll come down multiple times on the way up, but as you zoom out, the move is up, I believe, for the next 3 years, now that we've gone through this year-long pullback that we've seen 3 times previously. So that's something to look forward to. And as you can see here, each bull run has diminishing returns. So you can see this had a $61,000 run up, 61,000% run up. The next bull run had about a 14,000% run up. This last bull run had about a 2,300% run up. And then this one is going to be diminished as well. And I'm thinking, you know, we're going to be in the 1,000 to 2,000% run up range this time. So over time, we're having diminishing returns. That's what a logarithmic regression band is. The curve starts to flatten out once adoption comes. So each one of these new cycles is going to have diminished returns relatively by percentage. So that's a good one. Also, this is actually in tune with the Fed and what they do as well. So the Fed's been raising rates for the past, I don't know, 6 months, close to a year, you can see that the Bitcoin price has been coming down. I think it's a coincidence that the Bitcoin price, the Bitcoin cycle coincides with the liquidity cycle of the traditional financial markets, because they're both drawing down. I think the Fed's going to come out tomorrow, which we'll go ahead and talk about now, is the FOMC and meeting is tomorrow. And for those of you who do not know what the FOMC is, it's the Federal Open Market Committee. It's where the Fed comes out and indicates what the rates will be going forward, and we will get a sense of what the Fed is going to do over the next few months. A lot of people have already speculated that they will raise rates 25 basis points, and that is about all they can do, or they're going to do. They'll level out until the economy gets back to their 2% inflation rate, which is what they aim for. There's also been talks about the inflation rate being readjusted to 3% due to the amount of M2 money supply that they've inserted into the economy over the past 3 years. They're trying to readjust the rate so that they don't have to get back to that 2% baseline inflation rate. They may be moving it up to 3%. So we'll see if there's any talk of that, where we go from here. And the reason why they will never go negative on the rates is that they need the rate of inflation to outpace the interest that they're paying on the national debt in order to debase the debt. And that is why they cannot go negative on the inflation rate, because they have to continue to service that debt with new money. All right, guys, so I just wanted to show you this, talk a little bit about the Fed, tomorrow's meeting. One more thing to look out for tomorrow is the earnings report coming out from the tech stocks, Apple, Google, Amazon, Netflix, all of those big name players, and see where their earnings are. They've laid off lots of people over the past year, over 220,000 tech employees. I assume that this is going to help their earnings. So I'm making a prediction that their earnings are actually going to be okay this time around. So we'll see about that. This is actually a big week for the market. So we can expect maybe a move after some of these meetings and earnings come out. All right, one more thing that I wanted to show you is some of the this is the Bitcoin hash rate. I think this is important because the Bitcoin hash rate, which indicates by the orange line, is basically the security of the network. Mining hash rate is the security of Bitcoin. That is because the greater the level of hash power, that can be thought of as computing power, that is operating on the network, the harder it would be for someone to overpower and attack the network. So what this says is Bitcoin's getting safer, more secure over time. It's actually the safest and the most secure that it's ever been. And that's also to compound the fact that Bitcoin's never been hacked, never been overcome, never been attacked, so never been infiltrated. So if you're interested in being your own bank, getting into the space, I would recommend this is a good time. We're down, in my opinion, it's a good time. We're at a low point in the market still, even though we've seen this little bullish run up. I still believe this is not a bad time to dip your toes into the crypto space. Another thing is the active addresses. This gives us a good idea of who's accumulating and the adoption of cryptocurrency and Bitcoin. You can see that this is at an upward trend over time back to 2012. We're at the highest levels it's ever been right now. Getting close to that 1 million mark of people with greater than 1 BTC. So that's a pretty cool indicator as well. So guys, the fundamentals right now are stronger than ever. Everything is at its peak on Bitcoin fundamentals, while the price is some of the lowest we've seen in the past year or 2 years. So it's a good time to be in the space. I think we're going to move up from here on out for the next few years. It's not going to be straight up. It's going to be up and down and up and down. So if you're in for the ride, if you can take the volatility. Another thing about volatility that I think is important is, for me, I'd rather hold a short-term volatile asset that goes up over time logarithmically than a long-term non-volatile asset that loses purchasing power to the dollar over time. And that's the way that I look at this stuff. And I think that's the way that a lot of people should kind of change and shift their paradigm to start looking at, Bitcoin and some of the crypto space in general once you look into and do your research on the coins. So guys, I hope that you enjoyed that. I hope you got value out of that video. If you enjoyed it, please hit the like button, hit that subscribe button, and hit the notification bell to get all these updates. We're going to keep pushing out videos. And until then, I will see you next time. Thanks.